I'm joined in our London studio by Ralph Silva of Silva Research Network. Thanks for coming in, Ralph. Good to see you again. So, why are Greek banks having such a tough time right now?
Well, we've got to make the distinction between Greek banking and the sovereign wealth issue. Ironically, the Greek banks are they have very little investment within sovereign wealth. It's mostly foreign banks. The problem with Greek banks is they're very heavily retail-oriented. And with the austerity program in Greece, that means that a lot of people are defaulting on their loans. So it's actually going to get worse for Greek banks before it gets better, because the austerity program is just in the beginning of its process.
So what you're saying is that Greek banks are suffering mainly from the fact that they're very domestically focused. So how does that compare with, say, their European counterparts?
Most of the big European banks have operations in at least 3 countries, some as much as 80 countries. So even if they're not doing particularly well in one area, and of course in Greece they're not doing, and nobody's doing well in retail banking, they can offset that by other places. The Greek banks simply don't have that option. They're just too small to go across borders and generate enough money outside of Greece.
So, interestingly, you've said in your latest note that with foreign banks leaving the country, that's actually a good thing for Greek banks.
Yeah, that's the only positive that I can see right now for Greek banks is the fact that people who are going to pay back their loans, who are have a lot of collateral, they don't have the option of actually borrowing money from an HSBC or French banks because they're gone. So they have to go to the Greek banks. So in the future, it'll be much better. They'll get great debt going forward, but unfortunately, they have to offset all the bad debt they've had over the decades they've been lending money.
Now, Greek banks seem to be coming under growing political pressure to merge. Of course, I suppose this is not very surprising given their second quarter profits. They're still suffering from loan losses, as we've been saying. What do you think we're likely to see in the next few months?
We will see some mergers. We must see some mergers. The efficiency of Greek banks is a shadow of the efficiency of most of the Western European banks. They're just not as effective as the other ones. And historically, they didn't have to be. They made a lot of money. They didn't have to put a lot of money into that area. So they have to be far more efficient, and that means greater size. But I'll tell you, we will see some failures of banks in Greece. They will be small banks. No question they will be small banks. But we will see some failures because the Greek government simply can't support the entire banking industry, and they're going into more problems before things get better.
And there's no way of avoiding that, in your opinion?
Not only there's no way of avoiding it, but we shouldn't avoid it. They need fewer banks. They need bigger banks, but fewer banking capacity in Greece.
And that will strengthen their overall industry as a whole, cutting costs, strengthening their balance sheets. Will it also improve their access to capital markets?
Absolutely. The bigger the banks, the easier it is to get capital, and they absolutely need that within the country.
I just want to broaden things out. Look at the ECB, of course. They're going to be meeting, and they're likely to extend emergency aid to the region's banking industry into next year. Is that the right decision? What are the implications of that?
It's not going to hurt, but the truth is it's not going to fix the problem. The reality is that they can put more money into the banking system, but they can't guarantee where that money ends up. The vast majority of money is ending up at large organizations that are using that money to improve efficiency, which by definition means we're going to lose more jobs. It's not going to the small to medium-sized organizations. The politicians have to get involved to force money into the SME world, and that hasn't happened yet. So I'm not sure it's going to be greatly effective putting in more money.
We're just not getting that trickle-down effect.
That's right.
Is what you're saying. And will Trichet extend emergency loans to Eurozone banks until 2011, as suggested by Bundesbank President Axel Weber?
I think he must. I think he's going to have to, and I think it'd probably be beyond 2011. We need a stable banking industry in Europe, and that's the only way to guarantee it.
Ralph Silva, thanks so much for putting that to context for us. Appreciate your thoughts.